Nifty has been continuously going up, and without effortlessly, it has crossed 16,000. And once it crossed 16,000, we saw a sharp up move in broader market in large cap indices. For a change, for the last 10 days, what we are seeing is that Nifty is doing very well, whereas the broader market has seen some correction. And I feel it's a healthy correction because if you take the broader market, many stocks were going up without any reason, and there is some sense of euphoria in the broader market. So the recent correction for the last 10 days in the broader market is healthy, but I feel it's a temporary correction in the broader market. In 2018 also in January, starting what we saw was that broader market started correcting, whereas Nifty started performing very well. So many clients were asking whether we are repeating the 2018 scenario where Nifty and Sensex will do well, whereas the broader market will continue to correct. My opinion is that in broader market is just a normal correction. Many of the stocks fell on low volumes. It's just a normal correction, and it's a matter of time for the broader market also to go up. For time being, Nifty has been going up very sharply. Even yesterday, if you see, Nifty and Sensex was up very sharply. Whereas if you take the advanced decline ratio, the decline was more than the advanced ratio. Many clients and from branch also called me yesterday. They asked, market is up, whereas our portfolio is either flat or negative. But I said it's a part of the market. It's just a matter of time for the broader market to go up. So nothing to worry. That is the opinion I have given. And if you take the economic level, the second wave in India is almost has has become stagnant, and so only in Kerala state where the number of COVID cases are very high. Now it constitutes more than 60% of all India level, and the economic activity throughout India has become to near pre-COVID levels. So if you take the COVID scenario in India, in 2020 we had the first wave, and 2021 we had the second wave. Namura, they were releasing one index called Namura Business Resumption Index. And if you see that, now we have almost reached to the pre-COVID level of the first wave, more than the first wave. And when COVID started hitting in our country, March last year in 2020, economic activities started coming down very sharply due to lockdown imposed by the government. And then once the lockdown was released, economic activity started recovering. And 2021, when second wave came, again many individual states started putting lockdown, and that affected the economic activity, and the Namura Business Resumption Index again fell. Now due to very low COVID level in many states, the economic activity has again picked up, and now we are almost near to the January, February of 2020. Now the index is at 99.4, and the peak index we saw during the first wave was 99.3. So now if you see the index, it is now better than the peak of first wave. That indicates that we are near to the pre-COVID levels, which is very positive. And the second quarter, that is July, August, September, if you take, means it will be much better than what we have seen in the last 6 quarters of economic activity. So the business is doing well, and a resumption has been very, very sharp, and we expect a good results to come in July, August, September period. Internationally, if you see, US markets are record high. They are not at all falling, and they are doing very well. Most of the companies declaring results in US are either better than expected or in line with the expected. If you take S&P 500, more than 80% of company has reported better than expected. So US market, which is the mother of all market, has been doing very well. Whenever there is a huge bull market, we always see that the IPO market used to become very strong, and there will be a hectic activity in IPO market. So this time also it has happened now, and many companies were coming out with IPOs, and most of them are was subscribing by a huge margin, and More than that, they are listing at a huge premium to the issue price. Many retail investors were actively participating in the IPO market. And so if you combine all together, overall market has been very good. It's a good market to participate. Even though many of them were asking index is at a peak level, whether we should sell and stay away from the market. But my opinion is that still a lot of steam is left in the market. There may be time to time some small correction will be there. As always, bull market correction will be very sharp, but it will be swift. That means very short period of time it will exist, and immediately it will bounce back. So nothing to worry as far as market is concerned as on today. If you see that Nifty and Sensex has outperformed the mid and small cap indices, Nifty and Sensex almost up by around 5 to 6%, whereas Nifty mid cap it is just 0.7% up when compared to the last meeting, and small cap is up by 1.8%. So large cap indices has outperformed the mid and small cap by a decent margin in the last 1 month. And if you see in the last 10 days, many of the portfolio has actually come down, even though Nifty and Sensex has gone up. It is just similar to what we have seen in the January, February period of 2018, where Nifty and Sensex did very well, whereas the majority of their portfolio did badly. But this time it is not going to be like 2018. It's just a temporary phenomenon, and we feel that mid and small cap will again start participating once the correction in the mid and small cap stops. There are a lot of data which are coming. IIP data is there, GDP data is there. If you take in macro side, then inflation data is there, auto sales are there, and one data which is very convincing, which gives me much more hope about the economy, is the exports data. For any country to do well, exports is key. Even a highly populated country like China, if you take, their economy did very well in 90s and 2000 because of their very high export level. And if you take the other countries like Korea, Japan, Vietnam, their economy and all went up very sharply only because of their huge increase in the exports. If you see in India, exports has been doing very well. Even during the peak of the second wave, we were seeing exports has been consistently above $30 billion. And if you see in the month of July, it was around $35 billion, which is the highest ever exports we have seen in our country in a single month. And this is a hot data, and it's not a percentage increase. It is an absolute figure, and it gives us much more comfort about the economy. If exports consistently does do well, means definitely it will be a big tailwind to our economy, because exports will give forex money, and the money will come into our country. The profits, whatever got due to exports, will come into our country, and the employment generated because of high exports, that money also will stay in our. It will be a big booster to the economy. We have a huge population, so for domestic demand, we no need to worry. If exports consistently do well, means it will boost the domestic demand also. Economy will fire on both the cylinder. So the export data gives us much more confident about our economy, which will do well. If you see that the monthly merchandise export was around $35 billion in the July 21st, which is the highest ever. This is the merchandise export. Merchandise exports mean the exports of pharmaceuticals, engineering items, which are hot items, marine foods, agri foods, gems and jewelry. These are calculated in this merchandise export, whereas the service exports like IT and all won't come into this. Government will release that figure separately. What we are talking about is only the merchandise export. Textile has been doing very well. So the hot products which are being exported has been doing very well. And in the month of July, it was 35 billion. Up when compared to last year, it was up by very huge margin. But last year we can't compare it, because last year was during the same period we were affected by COVID first wave, which was much more deeper than COVID second wave. So even when we compare with 2019, the exports were up more than the 30%, which is very heartening. So whatever data if comes now, we have to compare it by 2019 to see the real growth. When you compare to year on year, it won't give much meaning because last year we were affected by COVID wave first, which was much deeper than the wave two. So if you want to see any comparison, means we have to do comparison with 2019 data, and exports when you compare with 2019 data, it is up more than 30%, which is an extremely good figure. And the merchandise export, if does well, means it's a high employment generating sectors like textiles, engineering, and all has done very well, which will give boost to our domestic economy. And the high export figure also indicates another one, that the global economy also recovering. Because of recovery in global economy, exports are doing well. And the other important thing why exports are doing very well is that many countries have started adopting this China plus one strategy. Because of some geopolitical reason, and because of this COVID initially came from China, many countries have started de-risking their supply from China alone to other countries, and part of it India has grabbed it, but still most of the opportunity has been grabbed by other countries like Vietnam and all. They are utilizing very well the China plus one strategy. And if you attend any conference call, most of the analysts and management will tell that China one, because of China plus one strategy adopted by many countries, we are getting lot of inquiries from other countries. And analysts are also will be asking that because of China plus one strategy, whether the company is getting benefited. That question is asked by the analyst. Whereas many management were telling that China plus one strategy is giving boost to Indian exports. So overall, is a very good data for India, and if I expect that the exports will continue to do well. Government have previously government used to release the data on 12th, but nowadays what they are doing is that in order to boost confidence and morale to the people, to the economic community, what they are doing is that the absolute number they are releasing on the first week itself, whereas the actual numbers of individual sectors they are releasing on 12th. And now what they have told 2 days back is the August first week exports data they have told it. And that means we are in the second week, whereas the first week of August almost 100% jump in exports is there. So in the month of August also exports is doing well, and I expect that the export will continue to do well in the coming months also, which will give boost to our economy. Whether if you see that whether this data is enough, if you ask me whether India is very successful in exports, if you ask me, I don't think we have just started scratching the bottom. Just I have put one example comparison between India and Vietnam. Vietnam is a country which is having around 10 crore population, just less than 10 crore of population. India, we are nearing to almost 40 crore of population. If you see the exports data of a country like Vietnam and India, if you see means, Vietnam, if you see means, there has been a consistent increase in exports happening from 2009 onwards. If you see that the chart has been consistently going up. Whereas if you see in India from
Screen sharing
2009 onwards, went up, then became very stagnant for a very long period of time from 2012 to 2018-19 level. Then the COVID came. Now only we have started going up. So another 2 years, 3 years, it has to consistently go up. Then only we will get in confidence that Indian exports has become a success. Just for 5 months, the export data has been strong. No one can claim the success that India has become a successful export nation. When we did last consistently very good exports was during this 2003 to 2007 period. At that time only Indian exports did very well. At that time, if you see that market Sensex went up from 3,000 level to 21,000 level in the matter of 4 years by 7 times. 3,000 level index was there in 2002 end, whereas in 2000 7, it went up to 21, almost, and 7 times went up. At that time, exports, if you see that, from around less than 5 billion, it went to 20 billion. 4 times exports uh, figure went up. Now we have just gradually started going up. Let's see how it pans out. My feeling is that at least for the next few months, Indian exports to do well, and the government has to give some support for exports to do further well over a long period of time. And let's see how the data pan out. But in immediate near term, our exports will continue to do well, and our exports to do like a country like Vietnam. Even in China plus one strategy, Vietnam is one of the biggest beneficiary of that, and they have grabbed a lot of market share
Karthik
from
sir,
the China
Karthik sir,
in the
Karthik sir,
last 1 year.
Karthik sir, Karthik sir.
And some of the sector that can boost our exports is the first is the IT. Actually, till now what we were discussing was the merchandise export, but still I have put the IT sector in this. IT sector actually comes under the service sector export. And if you see that IT sector has been doing exceedingly well, and for the next 2 years, 3 years, IT sector to do well. All the big companies, TCS, Infosys, Wipro, HL Tech. Hope now the screen you can see it. Sector that can sector that can boost exports is some of the sector which I have landed up. And if you see that IT sector, even though till now we have been discussing about mercantile, what I have included the IT sector also, because IT sector is one of the big job generating sector in our country, and it comes under the service sector export. And if you see that the IT sector has been doing well, all the four top run companies, TCS, Infosys, HCL Tech, Wipro, and the unlisted Accenture, they are all recruiting on a big way. All these companies have a huge order book, and they will do well for the next 2 years, 3 years. Even if you see the stock price of these companies on a daily basis, all the IT companies has been doing very well, and they are recruiting a lot of people for the next 2 years, 3 years. IT sector will be the big job generating sector in our country, and it will be a big exporting sector. The next sector which can do well, where India can have an upper edge, is the pharmaceuticals, specialty chemicals, auto ancillaries. Actually, auto ancillaries is a big sector, and globally, if you see that Indian companies are now started exporting, and India can well become a exporting hub of the auto sector in coming years. Engineering sector has been doing very well, and if you see that the engineering sector, every month the government used to segregate the sectors of the exports which are doing well. And if you see that engineering is one of the biggest sector which has, where there has been a big jump in exports happening. And the latest one is the textiles one. And if you see in the last few months, the textile sector has been doing very well. Some of the results of the textile companies, if you see that, they are posting very good profit, and it could will become a big contributor to our exports. Textile is an if you take the chain of cycle of textile means, it's a lengthy one. For example, first cotton is cultivated. That cotton is made into yarn by spinning mills, and yarn is made into a cloth by weaving mills. Then it is dyed. In between, dyeing will come. So that is the chain of the textile. What India currently doing now is that, since India is one of the biggest producer of cotton, India produces cotton, and that is converted into yarns by spinning mills, and yarn is exported to many countries. But if you add value by weaving and export, like through bit lining or through towels, like that, means it will be a big value addition. And if you do that, means India can make more value out of the textiles. Right now, India mainly exports yarn, which is just an first end of the value chain of the textile cycle. And I think from in coming days, many companies may do more exports by value, by weaving and dyeing and exporting the end product. Agri products recently, many agri product prices has gone up. Even yesterday, if you see that sugar prices has gone up very sharply in the international market, and India is one of the largest producer of sugar. Next to world, if you take globally, Brazil is the number one. India is the second largest producer of sugar. And if globally, if sugar prices goes up, means then India is one of the biggest beneficiary, because India can export sugar at a higher price. Coffee prices are going up, and many agri product prices. If you take soya prices globally, it has gone up very sharply. And if some of the agri prices goes up, means naturally it will be the big boost to our economy as well as for the exports. So overall, these are the sectors which can boost exports in coming days: IT, pharma, specialty chemical, auto and auto ancillaries, engineering, textile, and agri product. If you take auto, means previously it used to be that Bajaj Auto used to export a lot of their two wheelers and three wheelers. Next was TVS. Now Hero Moto also has started exporting a lot of two wheelers. Last month their figure was almost 25,000 vehicles they have exported. Previously, whenever the Hero Moto used to release their monthly figure, they used to export 5,000 vehicles, 7,000 vehicles like that. But last month they have exported 25,000 vehicles, which indicates that the export for the two wheeler is doing well. Similarly, if you take Maruti, which they used to export to some of the European countries, their car, their figure used to be around 8,000, 10,000, 12,000. Whereas last month, if you see the monthly release by Maruti, they have exported more than 20,000 vehicles. So auto and auto ancillary, auto sector also doing lot of exports. So these are some of the sectors which can boost exports and which will add to our domestic economy. And these three sectors I used to watch very closely, because they are the big job generators, as well as in our country. These three are the big job generating sector, as well as they do lot of exports. The first one is the IT sector. If you see that in 1990, early 1990, India was nothing in terms of monthly exports in IT. But now per year they are India and IT sector is doing almost 150 billion worth of software products to foreign countries, and giving job opportunities to majority of graduates who are coming out. Even now, if you see that many top IT companies, they are recruiting lot of people, and it is the IT companies which recruits most of the graduates from the from many engineering colleges, and they contribute more than 70-80% of overall recruitment. And seeing the order book of many large companies, if you see this TCS, Infosys, uh, they for the next 2 years, the graduates who are coming out of the college, everyone is likely to get job in these IT companies. They are going to recruit a lot of people. And the positive about this graduates getting a job is that these graduates, they not only get the job and get the salary from this company, but they also are the huge spenders in the economy. Because of very high salary level they get, they used to spend a lot of money. And apart from spending their entire salary, they also take loan for building houses, and for spending for travels and tours like that. So the people who are getting employed in the IT companies, they are the one which give big support to the economy by earning money as well as by spending money. If you just earn money and keep it in bank, means there is no use of economy getting pick up. Only if you get money as well as you spend, then only eh, then only the economy will get a boost because of higher consumption from these people. So IT is the one sector which is likely to do well, and for the at least for the next couple of years. The next one, which is looking very good after many years, is the textiles. If you see any company, textile companies, research like Vardhaman or Indo Count or any small spinning mill companies, everyone has showed huge profits. And one of the reason is that exports has been doing well. And and this sector is one of the big job creator, because they need only skilled job, but they don't need engineering graduates like type of job. They will give mid-level job for uh, for mid level and lower level kind of people. They used to give job, but it's a give big job generating sector. And with exports looking up, I feel that many people in the middle level and lower level will get lot of job opportunities in the textile sector. And in some of the sectors like tourism and hotels, a lot of people have lost job. And my own view is that the new job created by the IT sector and textiles will more than compensate for the job lost in the uh, lost in the tourism sector. The next sector which is very important is the agri sector, because in rural economy, even though it contributes less than 30% of our GDP, but if you see that it is one of the high job creating sector, agriculture. And many people in the rural areas, they still depend upon the agri for their job. And when agri prices goes up, means farmers will get benefit out of it. And it will give a big boost to the rural economy. So these three are one of the major sectors which is very crucial for our economy. The other thing which has been happening is the globally is that China, there is a strategy change by the Chinese government. If you see, if we, in 1980s, where they late 1979, where they started the globalization, they focused on the exports in 1980s and 1990s and 2000. Chinese economy did very well by boosting their exports. Now, recently, China has taken a lot of steps, and these indicate that their focus is changing from exports to domestic consumption. Recently, in the last 1 month, they have took a lot of action on companies which are making huge profits in education sector and healthcare sector, where the common man is getting affected in China. They have government have started taking a lot of action. And they are told that some of the sectors like education, the companies cannot make profit, and it has been made a non-profit sector, education, and many stocks were listed there. All the stocks has collapsed in China because of the government move. So right now, Chinese government, which has been focusing mainly for exports, now they have started focusing on the domestic consumption, and they are seeing that their own people, which has a huge population, they won't get affected because of high inflation in housing, education, and healthcare. The government is taking care of that, thereby restricting the price increase. And they are taking a lot of action to boost the domestic consumption rather than increasing the exports. Recently, Chinese government has banned exports of many steel products like pig iron, because if a Chinese companies export steel, means then there may be a shortage of steel in China, which may warrant a price hike. In order to curb price hike in steel price hike in China, they have banned steel exports, as well as increased export tax on many steel products, which all indicates that they have now started focusing on the domestic consumption rather than the exports. On one way, it is positive for countries like India, where we can boost our exports. This IPO market, it has been a hectic market, and I have been recently in my initial comment, I told that whenever secondary market is very strong, naturally IPO market will follow it, because promoters and company, they always want to seize the opportunity available in the secondary market and to price the IPO price higher. So they want to use the market opportunity, and they are coming at coming IPO in this bull market. In bull market, two positive are there for the companies which are listing. Number one is that they will get the high price for their shares issued. That is the number one. Second thing is that the appetite will be there. That means if you come for IPO for 3,000, 4,000 crores during bull market, it will be easily absorbed. Same time, when during bear market, if you come and issue, means you have to issue it at a lower price. Number one. Number two, you have to find buyers, because there at that time there will be not more buyers will be there. that is why many companies are coming out with a IPO now to seize the opportunity of bull market. One thing is common which is happening in the IPO market is that all the companies which are coming out with IPO are coming at very high valuations. Uh, and what is more surprising is that company itself is coming at very high valuation, and when listing happens, then it is a listing at a huge premium to the issue price. So the companies which are listed uh, during recently, most of them are trading at a very high valuation and at a huge premium. The second interesting thing which has been happening is that many retail investors are showing good interest in IPO, mainly because the listing is happening at a huge premium. If you get allotment means, then you will make 7,000, 8,000 rupees profit on listing, and turnover time has come down very sharply. Previously in 1990s, what used to happen is that if you apply for one IPO, it will take 90 days to get the refund, and from there it will take another 1 week, 2 week get listed. So it will take overall it will take 100 days in 1990s for an IPO to see check whether allotment has happened or not. But now within 10 days IPO are getting allotted and getting listed. So the turnaround time has come down very sharply thanks to SEBI for the steps they have taken to reduce the turnaround time for from IPO issue time to the listing time, which makes investors to participate in majority of the IPO. If they don't get the allotment, immediately they are putting money to the next IPO, and if they get allotment means they are getting good profit in the listing. That is why the retail investors interest has been very high in the IPO. And one thing which many investors should know that many of them used to ask me, shall I apply more lots so that I can get a uh, uh, higher chance of getting allotment? But right now, if you apply one lot, that is enough, because there is a few years back, SEBI has changed the model of allotment, where if a issue is oversubscribed, all applications are treated equally. If you apply one lot, or if you apply 7 lots or 8 lots, all will be treated equally for the oversubscribed issues. So if you want to participate in the IPO means you apply just one lot. That will be enough for participating. No need to apply more lots in a belief that you will get the chance of allotment is higher if you apply more shares. So always apply one lot, and that is enough to participate in the IPO. If you are lucky, you will get allotment. Otherwise, you will get refund in 7 days. That also money will remain in the bank account. Only after allotment, they will take the money from the bank. This is the history of the IPO. If you see the top bubble orange color, the number of issues which has come, and bottom is the figure amount raised in the IPO, and this is taken from the business today.in. From 2000 it has been plotted, and if you see that in 2007, which is the peak of the 2003-7 bull market, almost 100 companies came with IPO, and at that time highest amount of money raised, almost 34,000 crores has been raised at that time. Among this, in 2008, if you see where the fall started, only 16,904 crores has been raised. A bulk of the amount has been raised by Reliance Power. And if you see in 2017, where again the market was peak, for the broader market, it was at the peak, 67,000 crores has been raised in that. In 2021, now till July, just 7 months has passed. 28 companies has come with IPO, and they have raised 42,000 crores. And I expect that this LIC IPO, this is expected to be an 1 lakh crore IPO, which is going to be the highest in Indian history. And in today's paper, I read that they are planning to come in 2 stages. First 50,000 crores IPO, and after a few months, another 50,000 crore IPO, because they don't want to suck all the liquidity at one go. 1 lakh crore is a big amount for the Indian economy. If they suck 1 lakh crore means, then most of the liquidity will get sucked. So they want to come in stages, and still LIC IPO is a big one, and the overall amount is expected to be around 1 lakh crore, and they are likely to come in two stages as per today's news. And my view is that LIC IPO will easily sail through, and many of the retail investors will put money in there. Even now, the number of demat accounts getting opened is much higher than what we have seen historically. And 2 days back, our finance minister talked uh, uh, in a meeting, and she highlighted that the number of new accounts opened in demat, she mentioned, and she told that many people are actively participating in the market. And my gut feeling is that before the LIC IPO comes, our market will not fall. Only after a big IPO like LIC comes only, we may start thinking of a serious correction in our market. Till then, even if correction comes, it will again bounce back. We won't see a permanent correction till the LIC IPO comes and hits our market. The other important thing where investor has to watch, those who are applying the IPO, they have to watch this. Uh, there are two ways companies are raising money. One is the fresh issue, and the second one is the offer for sale. Now, most of the companies which are coming for IPO, they are coming for offer for sale. What is meant by offer for sale is that existing shareholder will sell the shares to the public. So the money raised through the IPO, money will go to the selling shareholder, and it won't go to the company. That is what majority of the companies are coming now, and most of the promoters or private equity players who are existing shareholders, they are they are the ones who are selling the shares in the IPO and taking back the money, and company will not get any money because of the IPO. It will just get listed. And if you see recently Cartech IPO was came, it is 100% offer for sale. That means whatever money Cartech raised through IPO, all the money will go to the shareholders of the selling shareholders, and money will not go to the company. The other one is the fresh issue, where the company will issue new shares, equity capital will go up, whereas money raised in that will come into the company, and that money can be used for growth purpose or for retiring debt. Recently, Zomato raised money, I think around 9,350 crores or something they have raised. Among that, 9,000 crore was the fresh issue of shares. That means money has gone to the company. Only 350 crore was from the selling shareholders, which is the offer for sale. So the Zomato IPO money has gone into the company, whereas the Cartech IPO, if we say that money has gone to the selling shareholders. So what an investor used to prefer is that fresh issue they should prefer, because money will go to the company, and that money can be used for the growth purpose or for retiring debt, and that will get reflected in the future results of the company. But if we see that currently most of the IPOs are coming which are only through offer for sale, where existing shareholders were selling the shares. Globally, one even US market has been doing well. In the initial comments I told, one event which can derail the momentum in the US market is the US Fed tapering. Right now, in order to boost the economy, US Fed has been buying almost 120 billion of treasury and mortgage securities. They are buying in from the market. US Fed every month they are purchasing 120 billion worth of treasury and mortgage securities from the market. That means every month US Fed is pumping 120 billion into their economy in order to give liquidity boost to the economy, so that economy will revive from the COVID pain and COVID disruption. And recently, what is happening in the US economy is that inflation has been going up and unemployment level has been coming down. Suppose if inflation level continuously goes up and unemployment continuously comes down, means then what US Fed will do is that the purchase right now 120 billion of liquidity is pumped into the US economy through purchase of treasury and mortgage security. They may reduce it. They may gradually reduce it on fear of higher inflation, and that is called tapering. And if you see that, if any commentary comes from US Fed regarding this taper means, at that time market may see some correction because on fear of liquidity tightness. Right now, majority of the stocks are going up because of higher liquidity in the economy, and uh, many companies are trading at very high valuation, mainly because of a very high liquidity present in the economy. And if US Fed start tapering means, there may be a fear that liquidity tightness may come, and the market generally used to start discounting 1 year, 2 year ahead before the actual event, and in that we may see some fluctuation coming into the market and some volatility coming into the market. At that time, we have to see it is not going to be the only equity market. It will get reflected in all the bond market as well as in the commodity market. And this is the US employment data. And if you see that, US unemployment has been continuously coming down pre-COVID level, and when it was less than 4% pre-COVID, and when COVID came, there has been a huge job loss in the US economy, and it went up to 15% unemployment rate. And after that, gradually it start recovering. Now it is around 5%. It is there now. Less than 6% unemployment is, and if that gradually comes down to the level of 4, or before pre-COVID level means, naturally there is a chance that US Fed may start tapering it. And I expect that immediately the tapering may won't come. Only if inflation goes up very sharply, then Fed may think of tapering, and it will take few months. I don't expect that immediately Fed will take decision, because right now only US economy started picking up. They don't want to derail the recovery in the US economy in a hurry, and they will wait few months, and then only if they get concrete data of inflation going up very sharply, then only they will take they will start tapering it, but it will still few months away now. Q1 results, if you see that today is the last day for announcement of Q1 results, and if you see that results were mixed. So by today, almost all companies would have announced their results, and it was expected that SEBI may extend another 15 days, but they did not did that. And today, by today end, we will see all the companies would have announced their Q1 FY22 results, and results were mixed. And sector wise, if you see that, bank and NBFC have seen an increase in NPA. And banks, if you see particularly that the deposit rates have gone up very sharply, whereas the advances, they have lagged the increase in deposit rates. And many, almost it's a common factor in all banks. And NBFC, if you see that many NBFC have seen a sharp increase in the NPA level. Companies like M&M Finance and all has seen huge increase in the NPA levels. And one positive thing about both banks and NBFC management commentary is that from July onwards, they have started seeing a lot of recovery happening, which means that on quarter basis, in compared to June quarter, September quarter will be far better in terms of NPA. That is what majority of the management have indicated in both banks and NBFC sectors. And because of COVID second wave, quarter, many companies sales were affected, uh, and in next quarter we may see a sharp recovery in both sales and profitability. And in many cases, there has been a steep increase in raw material cost. Steel prices has gone up more than 50-60%. Crude oil prices, diesel prices has gone up, uh, and crude derivatives, plastics, everything has gone up very sharply, which has impacted profitability of many companies, because during COVID second wave, companies could not able to hike prices, and the raw material price was so steep that at one go it is impossible for companies to pass on to the consumers. And step by step only they will be able to pass on. It will take 3 months, 4 months lag for the companies to get back the raw material price inflation to the consumers. So that has affected profitability of many companies. And in pharma companies, if you see that in US there has been a huge pricing pressure, which led to lower profitability and lower revenue for many companies of their US business division. Uh, Generally, if you take pharma companies, they have three business segment. One is the Indian business segment. Almost most of the companies, any large company, if you see, they have three segment. One is the India, which has done very well for all companies in this quarter. The second one is the US, where many companies have seen below expected US sales, and there has been a sharp erosion of prices, which has made them lower profitability in the US. Almost all companies have affected because of the pricing pressure in US for pharma. That is why if you see that all the pharma company shares has recently corrected, mainly because of the concern of US pricing pressure. Whereas in India, it has done very well. Indian business for all companies has done very well, which has compensated some of the pricing pressure they have witnessed in the US. And this is the overall data. If you see that it has been taken from Business Standard newspaper. Out of 1,544 companies, if you see that the sales for this quarter, sales has gone up by 45%, whereas profitability, if you see, it has up by almost 200%. Profit has gone up, mainly because of very low base effect. Last year during the same time, June, July, April, May, June was the peak month of the COVID first wave. That is why a lot of lockdowns were there, that which affected the sales of almost all companies during that period, except pharmaceuticals, agri, and other essential companies. All other manufacturing companies got affected during that period. That is why, because of very low base effect, sales has gone up very sharply year-on-year comparison, and profit furthermore by almost 200%. And last year it was a very bad quarter where companies lost sales because of COVID first wave by 27 and profitability by 51. So year-on-year comparison, if you see, it has been very good. Whereas if when you compare with the January, February, March quarter, uh, many companies have shown lower revenue as well as profitability. But next quarter, it is going to be a very good quarter for many companies, uh, because July, August, September, where the economic activity has picked up very sharply, and it is almost near to the pre-COVID first wave level, which means that this quarter we are going to see very good results, and it will start coming from October onwards. Nifty Pe ratio. So this is the ratio where many of them are comparing. Many of them are telling that market has gone up very sharply. Valuation has become very high. Whether these indices level are sustainable. Daily, I used to get 4 or 5 calls uh, from our clients as well as from other people, that P ratio has gone up very sharply. What should we do? Whether we have to sell it, or we have to stay invested. And some of the newspaper also has misled the investor community few months back by flashing this news during the February month. If you see that some of the newspaper, they have told that Nifty PE has crossed 40, and it has been a historic high, and like that some panic they created at that time. So why the Nifty PE has gone up very sharply at that time is that because of two reasons. One is that till March 30, 2021, Nifty used to calculate their PE ratio based on the standalone earnings. Generally, consolidated profitability of company used to be much higher than standalone profit, whereas NSE used to calculate Nifty PE based on the standalone profitability. So that is one of the mistake NSE used to do it, whereas BSE for many years they are calculating a PE ratio based on the consolidated profitability of the companies. And if we see that during the same period, February 21st and February 21st, 9th February 2021, during the on the same day, Nifty PE was around 42, whereas Sensex PE was around 35. Why the difference in PE was that Nifty used to calculate based on standalone earnings, whereas BSE Sensex used to calculate the PE ratio based on the consolidated earnings. So almost 15-20% difference was there between standalone profitability and consolidated profitability. That is why PE ratio was high for Nifty, whereas for same earnings, Sensex PE was lower. Even though Nifty has 50 take 50 companies, Sensex take only 30 companies. But from March 31st, 2021 onwards, yes, NSE also shifted to consolidated way of earnings growth. And if you see that in a single day, NSE Nifty PE ratio has come down sharply from 40 to 33, almost 50% drop in PE ratio in a single day. The reason is that they have started calculating based on the consolidated earnings, just like Sensex. So the difference between Sensex and the Nifty PE ratio has come down once the NSE has shifted towards the calculation of Nifty PE through consolidated earnings. And now if you see that in spite of index going up from March to August, the PE ratio has come down. The reason is that earnings has gone up. So once earnings started growing means what used to happen is that P means P is the price which is the index level. E is the earnings of the 50 companies. In Sensex, it is the earnings of 30 companies. Well, once the earnings starts going up means what used to happen is that PE ratio will start coming down because the denominator has started increasing. That is why if you see that the in spite of Nifty going up, the P ratio has come down because of the earnings improvement. And in further quarters also, I expect that in spite of Nifty going up, the P ratio is unlikely to go up from here, mainly because the earnings will start going up sharply further from here on, because the current quarter, that is July, August, September, is going to be the good quarter, and earnings is likely to go up. Though the Nifty goes up, the numerator will go up as well as the denominator will go up. So in spite of higher Nifty level, PE ratio is unlikely to go up, mainly because of earnings improvement. Monsoon update, if you take monsoon update, is disappointing. Initially, SkyMet and IMD both has predicted that we are going to have a very good monsoon, but the progress has been disappointing. And as on yesterday, it was almost 7% below long-term period average. And this is the data taken on 11th August. But if you take on as on 13th August, it was minus 7%, and it is erratic also. In June, we had a very good rainfall. In July, first 10 days, it was very bad, and then it started picking up. And then from July last to till yesterday, we did not had much rainfall, and this has increased the departure from long-term average to almost 7 to 8% now. And some of the states like Gujarat and all, the deficit is as high as 64, which is a huge, it's a drought-like situation in Gujarat. So this time, considering the prediction made by IMD and SkyMed, till now it has been disappointing, and and it is expected that from August 18 onwards, monsoon may again pick up, and we have to see how this year it is going to end. The last 2 years, the monsoon has been very good, and this year also expected to be good, but till now the way it progressed and the way it has happened, it is disappointing against the expectation. GST collection, it has been good. Again, it has bounced back more than 1 lakh level, and we expect the GST collection will further start improving from here on. Foreign portfolio investors, no major inflow from foreign portfolio investors. What is surprising is that our market has gone up in the last few months without any support from foreign institutional investors. This is from April 1st to August 11, almost for 4.5 months of inflow. There is no inflow from foreign investors. Actually, 0.4 billion they have sold it, but still market has done very well during that period. Suppose if foreign flows start comes means I think how market will go up. Yesterday we had a sharp rally yesterday in our market. Yesterday foreign investors bought around 800 crores worth of shares, and I think foreign flows will again start coming in, and we are going to see big rally once the foreign flows start coming in. Second, this is the COVID wave. chat, and every time we used to discuss it initially, but now no one is able to predict what will happen. And only positive is that in spite of higher cases happening, the number of deaths and hospitalization is very less. And India, it is almost stagnant for the last few months. In the after the peak of second wave, it fell sharply. Now it is plateauing up, and one of the reason why still it is at a very high level is mainly contributed by Kerala. Almost 60% of cases are contributed by Kerala, and many states, if you see the North Indian states like Madhya Pradesh, UP, Gujarat, Bihar, Rajasthan, the number of cases are very less than 50 cases per day is reported. So almost no COVID is there in majority of states in North India. Only in South India, 60% is contributed by Kerala, and then Maharashtra is there, then Tamil Nadu and Andhra is there. If we leave aside these 5 states, then almost many of the states we don't see any COVID cases. And even the cases which are emerging, the number of hospitalization and number of deaths are very less. And globally also, if you see that even though cases are going up again, the number of hospitalizations and number of deaths are far less. So now, except the tourism sector, almost all sectors has become like a normal. Even there are COVID cases are there. People now not fearing, maybe because of two reasons. Most of them have vaccinated, and there is a hope that if you was vaccinated, even if you get infection, it won't be serious, and it won't be fatal. That is the reason why many people are now not fearing more about the COVID cases. Equity mutual fund flows, highest ever monthly inflow we had in the month of July, more than 20,000 crores, almost 22,000 crores. One of the reason why means last in the month of July, we had some of the end of force, ICICI Prudential Flexi Cap Fund. They have raised almost 10,000 crores in that. That is why the inflow is extremely high in the mutual fund. It is the highest ever monthly inflow in the mutual fund, in equity mutual fund, and which is positive. So whenever market goes up means we always see mutual fund inflows happening, and mutual fund inflow always gives some comfort to us. One thing is that suppose if for any reason if FIA started selling means, then mutual fund guys will start buying in, which will balance the panic level of FIA selling. And events to watch, number of COVID cases we have to watch it, even though nowadays no one is giving much importance to that. The monsoon we have to watch it very closely because it has been extremely erratic, and the deficit level has come to almost 8%. We have to see how it will be made up in coming days. From August 18 onwards, it was expected that the rain will again start coming in, and let's see how it come up. And on conclusion, our market will see serious correction only if US market corrects sharply. Many of them asking me whether index is at 55,000, whether market will see sharp correction. So my answer to all of them is that our market won't correct, will not correct. Our market will correct only if US market corrects sharply. Till then, our market will go on. Even if correction comes in our market, it will be only temporary. Again, it will bounce back. Only if US corrects sharply because of some reason, then we may see some serious correction happening. Even now, stock specific opportunities available. Since index level is 55,000, there is no hesitation to, there should be no hesitation to put in money. Easily you can pick one or two banks from top 5 bank. ICICI Bank, SBI, then Axis Bank is there. You can pick any one or two among these three. Similarly, among top 4 IT companies, SD, Infosys, TCS, HCL Tech, and Wipro, you can easily pick 2 companies in that. So the stock specific opportunity is available even now, and companies like L&T, Bharati, and all going up after many years of consolidation. Both stocks has given a huge breakout, and they are looking very strong technically also, and fundamentally also. If you take L&T, they have 3 IT subsidiaries which are doing very well, which is the Mindtree, L&T Infotech, L&T Technology, which may give support to the parent company valuation. And Bharati Airtel, there is a talk that government may give because of Vodafone issue, the government may put some slap to the pricing of telecom products. It will be win-win situation for Bharati. Whatever government takes steps, it will be positive for Bharati. Suppose if Vodafone goes bankrupt, means it will be positive for Bharati. So whatever happens to the telecom industry, it will be win-win situation for the Bharati Airtel. So a lot of stock specific opportunity are available. We are not recommending stocks which are trading at 80 PE, 90 PE or loss making companies like Zomato, or where we don't know how to value that stock. These type of stocks we are not recommending, but companies which we know how to value it and which can do well in near term, these type of stocks we are recommending. So there is still stock specific opportunities there, and no need to fear that in Nifty Sensex is at 55,000 level, whether we should stay away completely. If you are fearful, means stay, you can increase your cash level, but don't stay completely away from the market. That is our final remarks on this presentation. Thank you. We will. I will tell the recommendations now. So these are the 5 recommendations which we are giving now. The first one is the TCS. So if you see the top 4 IT companies, first one is the TCS, second is the Infosys, and third one is the HCL Tech, and fourth one is the Wipro. So among these 4 companies, Infosys and Wipro has done very well in the last 4 months, whereas TCS and HCL Tech are the big underperformers. We feel that both these company will do a catch-up rally, and both are having very good order book, and both will do a catch-up rally. And if you see the valuations between TCS and Infosys, almost both has come to the same level. Previously, TCS used to trade at a premium to Infosys. Now the valuation has come to the same level. We feel that the TCS will make a catch-up rally among the top IT companies. Year on year, it is one of the big underperformer among the top 4 IT companies. That is why we have recommended. And their order book also very strong. They are having just like other companies. And the second one is the Bharati Airtel, which we are recommending mainly because of the reason I told that because of the problem faced by the Vodafone. Vodafone recently, the Aditya Birla Group chairman, he resigned from the Vodafone board, and there is a talk that Vodafone may go bankrupt, or either it will government will take over it and it may merge it with the BSNL. The government is finding some solution, because out of 1,80,000 crore of that Vodafone is having, 1,60,000 crores to be paid to the government. If Vodafone goes bankrupt, means government will be the biggest loser. So government may try to revive the sector, or if Vodafone get merged with the BSNL, means then it may be a slow death for Vodafone, because we all know that how BSNL will manage the Vodafone. And whatever happens, Bharati Airtel will be the beneficiary because of that, because finally it is going to be a two-player industry, Airtel and Jio. And Airtel, the price has been stagnant for the last 10 years, if you see me, and now it has broken out of the range. Technically also, it looks very bullish. That is why we are recommending Airtel. And sale, if you see, one of the big concern of the sale was the very high debt level, and they have reduced debt very sharply in the last 6 months, and the management has indicated that they may further reduce the debt level in coming quarters. And enterprise value, if you see, in the last 2 years, the enterprise value hasn't changed for sale, even in spite of stock price going up, mainly because they have reduced the debt. And if they reduce the debt further, means there is a scope for valuation for going up further for the sale. Even now it is trading at attractive valuation. CSPL, it is the parent company of the Gujarat Gas, and we see that the valuations looks attractive. And CSPL also has reduced debt considerably, and they and most likely they will become debt free in next 1 year. and valuation looks attractive. And the fifth one which we are recommending is the Orient Cement. And it is a BK Birla Group company. In convention idea, we have given this company. I mean, you can go through it for our investment rationale why we have recommended. The same story. The company was not doing well for many years, and now in the last 6 months, it has been doing very well, and the debt level has come down very sharply. The stock has been right now range bound. One of the reason for that is that two big mutual funds has been selling their shares. One is the HDFC mutual fund, which has been holding the shares for last many years. They are consistently selling into it. And the second one is the Franklin mutual fund. They are also selling the shares. So once the selling gets over, then the stock price may read to 220 level. One can gradually accumulate this Orient Cement level. Fundamentally, the company has reduced the debt very sharply, and there has been a sharp improvement in profitability also. So the because of mutual fund selling, HDFC mutual fund selling and the Franklin selling, the stock price likely to be range bound in near term, but it's a good time to accumulate it and buy and hold it. My view is that it will go to 220 levels. So this is the 5 stocks we are recommending this time: TCS, Bharati Airtel, SAIL, GSPL, and Orient Cement. So last time some of the shares we have recommended did not did well. Awadh Sugar fell very sharply, 12%, but international sugar prices are going up. And if you have the share with you, means even now you can average it. It will bounce back very soon. The other shares which did not did well was JB Chemical, and you hold it, and day before yesterday result came, it was good, and the company likely to do well for the next 2-3 years. Axis Bank, Care Rating, Marks and Pharma, all the shares you can hold it. Whatever loss you have seen in the last 1 month because of the underperformance of mid-cap companies, all will be made up in the coming months. So this is the presentation and my recommendation.